Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. And joining me are my co-host, Coindesk Managing Editor of Global Capital Markets, Lawrence Lewitton, as well as Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Hey, good morning.
Good morning.
We're still on a tear with Bitcoin. Let's have a live look right now. The Coindesk Bitcoin XPX index currently trading at 52,511. Bitcoin shooting up almost 5% over the past 24 hours. But taking a look at ETH, the Coindesk Ether price ETX index is at 43.33. So trading pretty flat, but down about 0.25%. And the new DFX, Coindesk's DeFi index, is at 567. DeFi also pulling back almost 5% in the opposite direction of Bitcoin in the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as the leader in crypto news, events, and data. So an interesting decoupling of Bitcoin and the rest of the crypto markets. Lawrence, what's going on?
Yeah, that tells you something's going on, and it has nothing to do or little to do with crypto itself. You take a look at the Coindesk 20, and of the 20 assets that are there, 2 are stable coins, so the prices don't really move. Then you have the other 18, only 3 are up. Bitcoin, Bitcoin Cash, and Dogecoin. Bitcoin Cash and Doge are like, let's be honest, guys, not exactly the most serious cryptos out there. Bitcoin Cash maybe a little bit more so than Doge, but, not as much. And everyone else is down like 3%. So this isn't like, people are saying, Gensler said he wasn't going to ban crypto. It's going to be great. And it's like, yeah, but look at the other crypto. They would be up if that were really the news story. There's something else going on. And guess what that is?
What is it?
Well, take a look at what's happening in China, right? China is having right now. There's contagion in the commercial in the real estate space, right? Because they had Fantasia, not just a contestant on American Idol. Fantasia is a real estate developer, and they defaulted. They didn't pay they missed a payment on one of their loans. And that shows that it's beyond Evergrande. And there's money trying to get out of China right now.
Oh.
They're not going to go to they're going to go to the most liquid form they can if they're going to do it in crypto. And it's not it's not going to be, I'm sorry, it's not going to be ETH. It might not be ETH. It's not going to be Matic. It's going to be most likely Bitcoin.
All right. For Doge, I can't say. I don't know if Elon's been tweeting about it. Some celebrities have been tweeting about it. Bitcoin Cash. The BSV conference is happening in New York. I did have a chance. Someone told me a Bitcoin event was happening. I stumbled in and I was like, oh, it's a BSV conference. And I did see some developers. They did have some use cases, hackathons going on. So there is a developer community creating things on BSV. But and for Bitcoin, we all know Bitcoin is going up. But who knows why? Emily, maybe you can weigh in on what this could mean. I mean, SEC Chair Gary Gensler did speak before Congress the other day saying that a ban on crypto would be up to Congress.
Right. So Gensler is basically reiterating what Powell just said, which is that the U.S. has no plans to ban Bitcoin or crypto. And to me, these headlines are a little bit strange because nobody ever said that the U.S. was going to ban crypto. This has never been a serious conversation. Maybe, somewhere there's been some politicians that have spoken about Bitcoin in a very aggressive way. But on the federal level, nobody's been talking about banning cryptocurrency. In fact, everything the U.S. is doing is pointing in the opposite direction, which is trying to regulate the cryptocurrency market, which you could say is the opposite of banning. Some of the comments that are being made, for example, about the Biden administration trying to regulate stablecoin issuers as banks, that's a sign of integrating crypto more into the larger financial system, not banning it. So I'm a little bit confused. I mean, maybe these headlines are driving up the market, but it seems like they're not actually saying anything that anyone hasn't said before.
All right. Well, for more insight, let's check up on our crypto markets guest. The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. And we want to remind everyone that today is Coindesk's Bitcoin for Advisors conference, focusing on the changing financial landscape. Advisors will explore the tools to best understand how Bitcoin, Ethereum, and other digital assets can successfully impact their clients' portfolios. And joining us now is Morgen, Rochard, financial planner at Origin Wealth Advisors and one of the speakers at today's virtual conference. Hi, Morgen. So taking a look at the crypto markets, again, very interesting to see Bitcoin shoot up, but the rest of the crypto markets actually pull back. What's your outlook?
Well, I believe that Bitcoin is the only one that advisors should consider, and it's something that's going to be discussed today at the event. It is the most liquid, like Lawrence mentioned, and it is the one that has the longest proven track record thus far in the space. And so today's event is going to be about how advisors can include it in their practice, what questions they should be asking themselves as they go down the Bitcoin rabbit hole, and how they can implement this in client portfolios in a compliant way, in a way where they can communicate with their clients in a really educated manner about the asset class and what important aspects of the asset class they want to discuss with clients.
Hi, Morgan. So I think you're right. There's a good case to be made for investing in Bitcoin over the long term if you look at the price over the years. But I imagine you probably give some short-term advice as well. And that to me seems like that would be incredibly difficult since nobody ever knows what's going on with Bitcoin, why it rises, why it falls, what's going to happen next, right? So, how does an advisor handle that kind of environment? Like, how do you advise people in the short term about what to do with Bitcoin? Or is your advice basically just buy it and hold?
Yeah, I think it kind of depends on an advisor's practice. My practice is very focused on buying and holding, has always been before Bitcoin was even a thing in my practice. So it wouldn't be unusual for me to go out and advise to a client, hey, we're going to buy this and we're going to hold this for a very long period of time. We do that with stocks consistently in my practice. So as far as that's concerned, I feel like it probably depends on what kind of advisor you are and what kind of advice you're giving. If you're generally giving short-term advice, then yeah, you're going to have to advise on these things on a short-term basis. If you're more of a, asset allocator, set it and forget it kind of person, you set asset allocations to really mimic what a client is doing in their lives, then no, you're not going to have these just short-term discussions.
So Morgan, in the relationship between the financial advisor and the client, so overall, if we're looking at the entire industry, are we finding the demand is coming more from clients asking their financial advisors, look, we want this in our portfolio. Can you tell me more about it? Or can you make it happen? Or is it financial advisors looking at correlations and thinking about it from the perspective of portfolio management and saying, look, you need something that offsets your stocks and bonds and commodities, and something that's has a lower correlation, even if it's more volatile, is a good thing to put into this portfolio. Where's the demand coming from? Is it more of the clients or is it more the financial advisors?
I think it's going to depend on the practice, but I would say on average, it's probably more from the clients than it is going to be from the advisors, right? Advisors right now are very scared to do anything because they don't know how to be compliant in this space, right? The rules are a little fuzzy, right? The SEC said that Bitcoin's not a security and therefore we can advise on it, right? But it kind of depends on where you're custodying client assets, how you can get access to it. There's a whole issue of private keys. I think advisors feel like kind of fish out of water, and therefore they don't really want to allocate until maybe they have a little more rules and things set in place for themselves. Whereas I think clients are coming in, they're seeing prices of cryptocurrency going up, and they want to know, hey, is this in my portfolio, or how can I get access to it? Or they have a lot of questions. I would say in my practice, like the clients who don't bring it up, when we do bring it up, their eyes light up because they wanted to bring it up, but they weren't sure whether or not it was appropriate, type of a thing. Or people are just asking about it and have been asking about it for a while.
So, Morgan, earlier you just said something that's actually kind of controversial, where you said, you were basically only focusing on Bitcoin. And I'm just curious, I understand why certain tokens one would be wary of putting in someone's portfolio. We won't name them by name. But, when you look at something like Ethereum, which is like the second largest market cap, that's at this point a pretty established, legitimate cryptocurrency. Do you see your position changing on that in the future, like in including other coins such as Ethereum or other large cap cryptocurrencies?
No. Ethereum has all sorts of issues. I'm sorry. I'm just going to say it. They're moving from proof of work to proof of stake. They have no roadmap in sight as to when that will be done. They've currently locked up a lot of client or a lot of money in that respect, and they're earning yield, but they can't move their money. They had a taxable event as a result of doing that. That to me is a huge red flag and not something that I would ever advise clients on doing, right? My job as a financial advisor is to be a fiduciary. It's to protect my clients, and it's to make sure that they don't make mistakes like that. So as far as I'm concerned, I mean, there are other issues with Ethereum. We can dig really deeply into it, but I mean, they don't even know what their total supply is. It's pretty hard for me as an advisor to advise clients on something like Ethereum when they have so many issues that they're pretty forthright about. So maybe if that changes in the future, that would be something that I would discuss with clients, but right now, absolutely not.
Is there some sort of a way to measure it so that, look, every client, as you brought up, you're not a big fan of Ethereum, but every financial advisor does come to the table with an amount of bias, whether they know it or not, or admit it or not. Is there any sort of way in which you can measure objectively whether or not other cryptocurrencies outside of Bitcoin would be right for a client's portfolio?
Yeah, so when I look at asset allocations, I look at things that people can hold for 30 plus years, right? If they're not holding it for a long period of time, or if they're somewhere in the midterm, we're looking at allocating between stocks and bonds. We're not looking at allocating at some new asset class that could go to zero, right? Like the last thing that I want as a client is going to go fund their kids' education in 10 years or go buy a house in 3 to 5 years, right? And the money's not there because we allocated to some token. It doesn't necessarily mean that there won't be new tokens coming on the market every single day, ones that have all sorts of promises. Right now, to me, these seem more like app coins than coins that advisors should actually consider, right? Not everybody has every single app that's ever been in existence on their phone. They just don't, right? Because not everybody needs all the different apps. What I'm looking for is something that universally clients can have in their portfolio. And for me right now, that's Bitcoin.
Morgen, I'm wondering what your thoughts are on this. Some financial advisors are pitching Bitcoin to investors to offset portfolio losses. As you know, crypto's taxed as a capital gain, and those losses can be sold and deducted against income, a form of wash trading, if you will, that may end at the end of the year if lawmakers get a couple of bill proposals passed. But is that something that you would advise for your clients?
Yeah, absolutely. I mean, if there's a legal loophole, right? The last thing I want is I want all of my clients to pay all of the taxes that they are supposed to pay and not a penny more than that. So right now there is a legal loophole on it. Wash sales are appropriate, and we have advised clients to do that.
Maybe you could tell us a bit about your client and their interest in crypto exposure. What kind of proportion are you hearing from your client base that actually do want to get into crypto?
Nearly 100%.
Oh wow! Okay.
Is that because you're very crypto focused, or is it because I mean, what were you doing before you were involved in crypto?
I've practiced. Gained a lot of interest in 2017 after the Bitcoin bull run, and it only increased from there. I would say my practice is if you looked at it on the inside, you wouldn't even ever think of my practice as a crypto-focused practice. It definitely is not. It is a very standard conservative financial planning practice where we focus on very long-term asset allocations and making sure that our clients always have the money that they need to do the things that they want to do. And we help them prioritize those things. So I would say that my practice probably looks like a lot of other financial planning practices in that regard. And people are very interested in this. I think the only difference is because I'm publicly open to Bitcoin, people are more apt to actually include those thoughts with me.
Interesting. All right. Well, Morgen, thank you so much for joining us, and looking forward to seeing you at Bitcoin for Advisors. That was Origin Wealth Advisors financial planner Morgen Rochard. Morgen is speaking at the special Coindesk event, Bitcoin for Advisors, free for financial advisors, and that is just getting underway and runs until 4 p.m. today. Sign up on our website at coindesk.com/events. And coming up, checking in on Asia and the red hot NFT markets. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, October 6th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, the Central Asian nation of Kazakhstan hit the headlines earlier this year when its low electricity prices proved a magnet for crypto miners making an exit from China following the clampdown there. But those miners are now being blamed for power supply shortages in the south of Kazakhstan caused by the spike in demand that they created. We're going to take a look at that reaction from miners and a whole lot more coming up. Let's get you up to speed from Asia to the world. Okay, first up, Kazakhstan's energy minister is clamping down here, proposing a number of measures to deal with power shortages and pointing the finger at crypto miners. Kazakhstan, once that safe haven for miners forced to flee China, now imposing limits on electricity consumption by mining farms that are already in operation. And they're also suspending connection of new farms to the grid. Forecast News' Timmy Shen reports on what that means for miners and the market.
In a government briefing reported on by Kazakhstan today, the country's energy minister said the national grid operator, KEGOK, must have the right to limit or reduce power consumption by mining data centers whenever there is a shortage of electricity. Crypto mining provider Zive told Forecast News that one of their mining farms in the south of the country has been disconnected for 3 weeks already, and that small and medium miners have been panicking. However, the government has promised to settle the issue and support development of the industry, saying it will build new power plants providing around 3,000 megawatts of gas-generated electricity within the next 5 years. In the meantime, Zive says it is considering all options.
We are also looking for some opportunities in off-grid mining. So we are looking for gas power generators, we are looking for wind generators, solar panels. So we're looking for options right now, like what we can do.
But Bekpaov is optimistic over the long-term outlook for professional miners in the country, saying that when the new power plants are built, they should cover all deficit risks. For Forecast News, I'm Timmy Shan.
Meanwhile, Bitcoin passed the $50,000 mark for the first time since the September sell-off Tuesday night Asia time. However, one curious thing, while Bitcoin's price has been steadily climbing, its dominance has actually fallen. Forecast News' Lachlan Keller reports on what's driving the markets.
Bitcoin was trading at a little over $51,500 Wednesday midday Asia time. The second time it's crossed the $50,000 mark since the May sell-off, which saw the entire crypto market tumble. However, while the price has been on a general upward trend since mid-July, its dominance has continued to fall. Over the same time frame, Ethereum's share of market dominance has remained quite stable, hovering between 17% and 19%. One expert told Forecast News that Ethereum has maintained its position due to real-world adoption of decentralized finance protocols using its network, and altcoin dominance is rising because of the proliferation of use cases.
The rest of the Ethereum ecosphere has been exploding on two fronts, and NFTs being one of those. And on the other side, competitor networks like Solana and DOT rolling out both NFTs and also really innovative auction systems like parachain auctions for Kusama.
For Forecast News, I'm Lachlan Keller.
And finally today, Korea's largest crypto exchange has been accused of deliberately listing faulty tokens to earn huge commissions. Lawmaker Min Byung-dug says that Upbit has delisted 145 altcoins. That's almost half the total number of tokens it has ever listed. And that it earned 314 billion Korean won, or around $263 million worth of transaction fees on those tokens. Now, Min claims that Upbit induced users to trade these cryptocurrencies, knowing that they lacked substance and would eventually be delisted. Well, we chased for some answers here, and Upbit told Forecast News that it has a strict review and verification system when listing cryptocurrencies, and that any delisting is for investor protection. It said the delisted tokens were not problematic to begin with, but later failed to meet Upbit's standards. Meanwhile, it's better news for another of Korea's big four exchanges. Corbit has become the second exchange to be registered by the Financial Intelligence Unit in Korea after its compliance was accepted. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
For another live look at Bitcoin, and Bitcoin is charging ahead. The Coindesk Bitcoin price XBX index is at 54,300 or so. Bitcoin is up about 8.4% over the past 24 hours, and just the past hour alone, it's been advancing 5%. The Coindesk Ether price ETX index, on the other hand, is also actually now rising, up 2.3%. ETH is now at 35.34. And the Coindesk DFX, Coindesk's DeFi index right now is at 579. DeFi is pulling back about 2.4%.
The Coindesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
And NFTs are turning into a mainstream gateway into crypto. And our latest example, do you know Quest bars? Well, the entrepreneur behind them is getting into the non-fungible token craze. Joining us now is Tom Bilyeu, CEO of Impact Theory and co-founder of Quest Nutrition. Hey there, Tom. So tell me a bit about your NFT debut project and why you decided to get into them in the first place.
So the project itself is called the Impact Theory Founders Key, and we like to say that it unlocks the future of everything that we're doing as a company. The reason that we are getting into it is when you look at NFTs not as a JPEG, but as a technology, you marry that to the idea that, at least I believe, technology is a one-way street. So once you get going, there's no coming back. And as I really looked at the technology, I realized what it allows you to do is reward your community. And for somebody like me who's trying to build the next Disney, what you need is a thriving community. And so we saw this as a tremendous way for our community to capture tremendous value from the things that we're building.
Hi, Tom. Welcome to the show. So it seems like everybody is creating NFTs these days. I guess, could you just explain to us a little bit more, why one needs an NFT specifically? Because, for a lot of companies, it's just kind of become this sort of just marketing buzzy. I mean, is there really a larger reason other than just kind of it's cool to have an NFT because everyone has an NFT now?
Yeah, so this is where it gets really interesting. And every time I go to explain NFTs to other entrepreneurs, the first thing you have to get them to understand is there's this concept in neuroscience called the God neuron. And there are some people that just have an outsized response to religious experiences. And then there, I think, is a similar thing in the brain that I will dub the ownership neuron. So there are some people, they want to own something. So they feel like, not only am I a part of a community in action, but I actually own part of this ephemeral thing that is the community. And then the next important part is to understand the metadata. So the question everybody asks is, all right, you've got a JPEG, you just paid a lot of money for it, but why can't I just go take a screenshot and now I have a pixel perfect replica of that? And when people say that, it's only because they don't understand metadata. And if you are a community first company and you understand what metadata allows you to do, which is who has a real copy of that thing. So for us, it's a key. And so if I want to give you access to something, which could be early access to an NFT project based on one of the comic books that we're writing, for instance, and we know that there's going to be high demand, not everybody's going to be able to get one, supply is really limited, I can say, hey, if you have a founder's key, which I can verify, then you're going to get early access to that. So somebody that copied that and tries to say, hey, I have one too, we can check the metadata. Or if you were to come to one of my live events, I can scan it as a ticket to the event, see that it's real, let you into the event for free or for discount or early or whatever. So it allows people to have a really dynamic and interactive relationship with the community. And when you realize that what NFTs do, once you understand that technological layer, they make both the real world and the metaverse far more interactive and customized to the individual.
So, Tom, first of all, welcome. And what exactly is impact theory? You're talking about making the new Disney and it's putting out this NFT. So what exactly is that? What's behind all this?
All right, so I'm going to give it to you in the world's fastest nutshell. And if there's anything you want to drill down into, we can do that. So I big brother for a kid in the inner cities in my teenage years here in Los Angeles, so South Central LA. Only supposed to be an 8-week program. Long story short, becomes an 8.5-year relationship with him. Had a very difficult home life. That leaves a lasting mark on me, but I'm too young to really help solve that problem for him. Flash forward 15 years later, I've built a $1 billion company. I have 3,000 employees, but because we're manufacturing in some of the worst neighborhoods in LA again. So I'm in Compton, we're in some other industrial cities. And so 1,000 of my employees remind me exactly of this kid. And so I started thinking, wait, I'm not going to make the same mistakes that I made then. I know exactly what people need to do to change their life in order to get out of these gnarly circumstances. So I create a university. And I just start teaching people, think like this, act like this. You could start your own company. You could become a linchpin in a company. You will definitely make more money over time as you increase your skill set. And I found that about 2% of people actually did something. And the people that did, I still get phone calls and text messages. You changed my life. I'm making more money than I ever thought possible. Just really opened the vista for them in terms of what they could do with their life. But that's only 2%. And so my wife and I are obsessed with scale. And so we started asking the no BS question of what would it take to impact the other 98%? And what we realized, the only honest answer is you have to sway culture and you need to get them when they're young. So there's this period between 11 and 15 called the age of imprinting. And the Japanese actually build their entertainment around this, which is a side story I won't go down unless you ask. But that putting those pieces together, we realized that the core competency that allowed us to market Quest as well as we did was we had built a studio inside of a protein bar company, which was very weird, but it had us creating our own stories and really taking hold of that community engagement. So we wanted to spin that out into a standalone company that would tell stories, traditional film, TV, video games, all of that, to make sure that in that sweet spot of 11 to 15, that we were giving people entertainment that had embedded in it ideas of empowerment. So the mission statement of the company is to make sure at scale that nobody gets to the age of 15 without encountering a growth mindset. And we plan to do it through entertainment.
So, Tom, I was going to ask about how Steve Aoki was involved. Before I do want to ask, whatever did happen to your little brother there?
So, yeah, that is a long and distressing story. So the promise I made to him when he was young was that, hey, as long as I live in Los Angeles, I'm going to help you with your homework. And we were able to pull it off for almost a decade. And then he was unfortunately being abused at home, which I wasn't aware of. He got taken from his home. I became the guardian to help him into the court system. He got into foster care. They were moving him farther and farther away at the same time that I moved to London. And so in that process, lost contact with him and have tried to reach out to him unsuccessfully. So I am hopeful that one day we will be able to reconnect, but we have not yet been able to.
Hope he's watching. And so, as I mentioned before, Steve Aoki is involved in this NFT. Can you explain what's going on there?
Yeah. So the whole idea is to tell stories that are like the stories that made me who I am. So Star Wars brought me Yoda. Yoda led me to real life Taoism, and Taoism changed my life. And so we want to tell stories that have that kind of real. It's entertainment, right? You just love Star Wars because it's awesome. But the little green dude also happens to have advice that's actually real. And so we want to tell stories like that. And Steve and I knew each other before, and we're both techno optimists. So we both have a very bright, rosy vision of the future in our minds. And we wanted to tell a story that matched what we call the third way. It's an idea that I took from reading Nelson Mandela's Long Walk to Freedom. And I don't think he ever used the word the third way, but the concept that he presents in the book is any oppressed people has three options. Option number one is to remain oppressed. Option number two is to become the oppressor. Option number three is to find a path of unity. And obviously we know how that played out in his life and absolutely extraordinary. And so we wanted to take that idea of what's going to happen in a society as people begin to augment themselves with technology. I mean, Elon Musk is already working on this. So you've got people that are augmenting themselves with technology. There will be a rift between people who do and people who don't. And so playing out the dynamic of opening on a dystopian world and then seeing if we can march towards, I won't say utopian because I don't think it exists, but marching towards something that's better through that third way of unity. But how do you navigate that conflict? And so it's a cool sci-fi story that Steve and I have been working on for years together now, and it's about to have its own NFT drop in early 2022.
Interesting. As you talk about your community, I can see how you decided to get into NFTs because a big part of it is creating that community. It's the gamification of it. But there are a lot already in existence. I mean, OpenSea, Nifty Gateway, Gary V, they've developed their communities. So what will be different about yours?
Well, so to go straight to what is different, our goal with the Founders Key is to show people, look, I'm going to spend the rest of my career building this. I've already generated fantastic wealth in my life. I'm not doing this for money. My wife and I had a decision to make. Do we buy an island and retire and never work again? Or do we come and do something that we think is meaningful? And right now, we're in this fascinating transition point where, as Max Planck said, science does not advance one insight at a time. It advances one funeral at a time. And culture right now is advancing in a similar fashion where you have younger people just rapidly adopting Web3, not only as a technology, but as an ethos. And so as a company, we're trying to make sure that that ethos is in the products that we create. And part of the ethos is the community should be able to capture a lot of the value of the growth of a company. And so we're putting that into the mechanic of our NFT. So our NFT, you could just say is, it's an image, a really cool image, I might add. But underlying that, because of the metadata, is all these other things that we're going to be able to give people access to that will help them capture some of the value as we grow as a company. And so that focus on making sure that the value is ending up in the hands, not just of the corporation itself, but in the hands of the people who are truly helping to build it. That is going to be, I think, that will be the thing that makes it really matter. We, of course, have individual things we're giving people access to and stuff like that. Yeah. That'll be better than what's already out there. We have mechanics that are new and different, but that'll be the power behind it.
Yeah, I see that with some of the NFTs. They're tied to real-world experiences, perks here and there, maybe some quest bars in the future. All right, Tom,
any new flavors?
Any new flavors? Lawrence wants a flavor.
They are bringing new flavors out all the time. They are doing an extraordinary job. So yeah, I would say keep an eye on that.
Tom.
More delicious stuff coming.
He loves protein. All right, thank you.
That kind of guy.
All right. That was Quest Nutrition co-founder Tom Bilyeu. A great time now to check in with Crypto Twitter with our tweet of the day. This one from Mason Nystrom, a research analyst at Masari, tweeting, "The NFT market officially surpassed $10 billion in secondary sales combined across a variety of categories, including gaming, PFPs, profile pics, sports, and collectibles. Ethereum leads all blockchains and layer 2s with over $6 billion in secondary NFT sales. So certainly a booming market to get into. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitton. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin coming up at noon. Here's the hash. You're watching Coindesk TV.